Hello, everyone. Welcome. This is a live due to the ECB rate decision and also ahead of the retail sales in a bit, actually, just in a bit. So I'm going to quickly share the euro dollar with you. Okay. Let me just quickly check for any comments in the chat box. Nothing so far. So, guys, let me just be quick. Here we are. That's euro dollar. That's the 1 hour chart. Let me just put the 15 minutes chart just to see the reaction. Due to the rate decision. As you might already know, or if you're following the news, ECB was expected to proceed actually to deliver another 25 points rate cut today. And this is what actually happened. So if I share also our economic calendar, okay, just a second. So economic calendar over here, perfect. So as you can see, ECB cut deposit rates on 3.25%, so 25 points rate cut indeed. The main operation rate also 25 points lower, 3.40%, and we have also retail sales out, and actually right now Ms. Lagarde will be on her toes as well with the ECB press conference. So we're gonna start following also the her comments, because as you might already know, comments sometimes, actually most of the times, comments are more important and provide more volatility than the actual result, because the actual result, even in this case, it was largely priced in. Okay, so here is the 30 minutes chart in euro dollar. As I mentioned earlier, dip 103.35, was it 108.32 level, right? We have seen the euro dollar breaking the 109 handle since the 15th of October, since Monday, actually. Okay, so is extending further lower. And before I explain also the technicals, I would like firstly to just let me just delete this random line. Okay, I would like to remind you something that I said. It's a Fibonacci extension. Oops. Come on. Sharing screen. Give me a second, guys. Something is going wrong. Stop sharing and let me do it again. Okay, here we are. Just to remind some of you, if anyone was here with me last week when I did an analysis in euro dollar, I put on these Fibonacci extensions with the slope, okay? And as you can see, it broken this week, okay? It broken the trend line, the bottom, okay? That I connect in these fractals, and extended lower for 4 consecutive days. Okay, it has been in a sell-off for nearly 3 weeks now. This selling pressure continues, my dear friend. Weedy James. Okay, James asking for euro O's, but let me finish with this one. Okay, so the rate cut has already been priced in. So their attention right now is on Ms. Lagarde, just because we want her to confirm whether December's rate cut will be an additional 25 points rate cut or even more aggressive one. Because if she confirms an even more aggressive tightening in the press conference in a bit, we could see markets pricing in December's rate cut. So that means further pressure for euro dollar. In the meantime, have in mind that in 10 minutes this candle will be closed, and if we see a confirmed breakout and enclosure below the 108 55 level, that could immediately and that could actually retest once again the bottom earlier, so just another 15 to 20 pips lower. But you see that overall the momentum remains negative in the long term, in the medium term. You can see the MACD over here. So if this dip, if this sell-off continues, okay, the next support level will be down to 108 or even 107.75 level, which is the previous swing low in the daily chart. But this if and only if we see consecutive lower lows. In the meantime, as I said, keep an eye on how this candle, this session will close, okay? um, because anyway the first 15 minutes to 30 minutes of every rate decision are the is and the press conference as well is the one that is the most volatile time period. So even though we do see from fundamental perspective further dip, if Miss Lagarde in a bit sounds even tiny dovish, that could, sorry, tiny hawkish or less dovish than what is expected, you know that might provide some kind of a support to the euro dollar. In the meantime, yeah, okay, that 15 candles close below, a bit of a mixed conditions over here. Let's see how she will perform. So the press conference started. She's saying that the economic activity has been somewhat weaker than expected. Disinflation pressure is well on track. Manufacturing continued to contrast. Services activity showed an uptick. Housing continues to fall. So these are dovish comments so far. So how far we have dovish comments supporting further rate cuts, more rate cuts. So let's wait and see. So guys, I'm gonna shift quickly to euros because you're asking about it. Okay. So okay, sorry. Here we are. Okay. Euro pound, euro, that's euro pound, ignore it for now. Euro Oz, here we are with Euro Oz. That's Euro Oz, my dear James. In a 30 minutes chart, a full pullback, pullback to 162 level. Momentum remains negative. RSI keeps pointing further lower. MACD, after this short-lived improvement, is back, extending below zero. A lot of selling pressure actually. Let me just also, I want to check. Yeah, I want to check the moving averages as well, the short-term ones, the 5 and 9 exponential moving averages. As you can see, pointing further lower. So RSI stochastic fails to provide any bullish signal, so that indicates further pressure for Euro Oz, with obviously another retest of the first support of the day, 161.90, and if that level breaks, my dear friends, this will trigger a rounding top, which is a bearish pattern, a breakout of the second support of the day, which indicates a further dip to the third support of the day, which is at 161.47 level. So let me just quickly check something out as well. That was another swing. That was support level since last week. Immediate resistance back in the 3rd and 4th of October was at 161.51, which is just a breath above the first support of the day. So you can see that these support levels are also in line with previous resistance levels, right? Can you see that? Or shall I let me just zoom in further so you can see it. So look at this beauty. 161.51. That was one, two, three, four, fifth. Actually, it was the resistance level for the one, two, three consecutive days in a row, right? And the immediate one, the 161.85, it used to be the latest swing high. If it helps you, use fractals, okay? If it helps you, you can use fractals as well if you cannot see it. Here we are. You see? 1, 2, right? Another one over here. So previous resistance, previous swing highs, and a rounding top if it confirms, right? So momentum is in line with this dip. So that's pretty much it. James is quite crystal clear. I mean, it's under pressure. Moving average and moving momentum indicators in the short term support this pressure. 162 obviously is a round number which was broken in the past. So yeah, it seems that the rate and the press conference continue to pressure euro against other major currencies. Let's see. I want to keep an eye on the news feed coming from the press conference. So, overall, by the way, just to finish with the Euro O's, it has been, this is a daily chart, James, just for you to keep an eye on. It has been ranging for 2 weeks in a row. So a break and a closure today or by the end of the week, which is tomorrow, below 161.80 level could trigger the attention down to October's bottom. But if and only if we see rejecting that floor and exiting that ranging market that we have seen it for trading with for the last 2 weeks. Basically, we need a decisive closure below this tiny block. It's not exactly a block, but it's a ranging market. You can see it, right? So here we are. Okay, now someone asked about gold. Many of you ask about gold as usual. What about gold? What about gold? Gold has seen another record high earlier before basically the ECB release. Another record high. The futures hit it and broken the 2700 territory, while in the spot market you can see that it breached 26.8876. As I repeatedly mentioned in our previous lives, I think also my colleague Mihalis mentioned it several times. Fundamentals keep supporting gold, no matter if Fed or the central banks will cut less rates than expected. Easing is an easing. So easing and even the anticipation of further easing is something that supports and boosts in general the demand for gold. And it's not only that; it's also the sorry, it's also the geopolitics and the sluggish Chinese economy. These are reasons that boost gold, okay, add pressure on oil, and it's a safe haven. Don't forget that. In the meantime, so regarding gold, we have seen another record high, which quickly reverted, okay, but you can see how useful this 50 exponential moving average is in this 30 minutes chart. This is a 30 minutes chart. Is that 50 period moving average is well supporting the gold price, so you can use it as your immediate support level, and as long as you don't see a confirmed breakout below it, that it indicates that it could remain on track to the upside with higher highs, higher lows. It's a bit more, I mean, it's a bit slow lately. So if I put the daily chart, you can see that for returning and extending higher, that took 6 days in a row after it was consolidating for more than a month. But momentum is positive and remains positive regardless of this slight ease. So as I said, especially ahead of the elections, uh, and ahead of the November 7th, which is the FOMC, we're gonna see gold supported. So intraday now, because I know that most of you are trading gold in a very short time frame, right? So I'm gonna put that in a 15-minute chart just to see that after that record high, it pulled back significantly, right? It pulled back significantly and is back to 26 70 75 78 territory. So indeed, in this very very short time frame, we can see that there is the sellers are a bit are taking over the control, but this is a 15 minutes chart, okay? So let me just uh, stochastic is pointing higher, so it's in contrast with the decline that we've seen. RSI is at 44, pointing lower, so it complies with the dip. MACD is basically neutral, it's basically mixed, so that's not helpful at all. Let me try and put my Heiken-Ashi on just to see whether it gives us any further clues regarding the short term outlook, the very, very short term outlook for gold. And no, there's a lot of indecision, guys. So you should wait a bit. At least for anyone that is trading in the short term time frame intraday, you need to wait a bit for some clarity in the direction, okay? Overall, in the long term and medium term, as you can see, it's crystal clear. 5 consecutive days to the upside, no tails at the bottom, suggesting strong positive bias, with the next record high being seen at 2705, 2716, or even 2736. However, intraday, my dear friends, we need more clarity, right? So the fact, even though we have seen a quick pullback, right? This is a 30 minutes chart. 30 minutes chart for gold. The fact that we have quickly seen a reversal from the record highs, right? That indicates some take profit conditions, some partially, but since there's ignore this, but the Heiken-Ashi, along with the momentum indicators that I showed you earlier, they provide some mixed signals, right? Indeed, the last two sessions, 30-minute sessions, have been bearish with no tail at the top. However, the tail at the bottom is huge, indicating that there is a lot of buying pressure as well. Okay? So, connect your lows, okay? And wait a bit for further confirmation, because this looks to me that in the down, the pullback, the correction might already run out of steam. Okay, so wait for some clarity, Ahmad. And who else asked about gold? It was Alan. The overall picture doesn't change, guys. It is positive. It is and expected to remain positive ahead of the US elections, ahead of the FOMC, ahead of NFP on the 1st of November, ahead of due to the geopolitics as well. But intraday, right now, 15 minutes chart, 30 minutes chart, the dip has paused. And right now is look undecisive, right? So be a bit patient, right? Uh, Before you take any decision, because currently this presents that the pullback ran out of steam, right? So even if I bring back the proper, not high Kanashi, but Japanese candlesticks back, you're gonna see that. Look at that. Okay, even if I don't use high Kanashi, if I stick to the Japanese candlesticks, look at this. This is the 30 minutes chart. Look at how small this body is and how huge the lower tail is. So what that means, it means that it has been under pressure, significant pressure from sellers, but bulls actually managed to push higher and close the session really, really close to the open price. So that suggests that bulls are trying to take back the control. So wait a bit just to see whether indeed this is over, the dip has over, and indeed we're gonna see another swing higher. This reversal, to me at least, is looking like a taking profit situation. Now, now, what else in regards to the? Okay, yes, let's check. Let's also discuss how the retail sales affected gold and in general the dollar index. So retail sales. Sorry, guys. So retail sales came out at 0.5% excluding autos, 0.4% in general. So a growth in retail sales has been seen. Okay, basically, uh, basically indicating that sorry, that there is growth in the there is growth in the some at least growth in the in the from the retailers. Sorry, basically it suggests consumer resilience. Okay, even if in the background we have still inflation quite hot and still quite high rate hikes, interest rates. Sorry. So there is no sign basically that consumption is weakening, or at least there is no strong sign. These were positive data, okay, and that basically confirm that, or indicated at least, that the Fed should not proceed with 50 points rate cut, but just with the 25 points rate cut for November, because we still see consumption quite strong, or at least not weakening as much as it should, in order to support an aggressive tightening, an aggressive easing, sorry, from the FOMC. Also, we had jobless claims out and Philly Fed. Philly pretty much, let me double check, rose a bit. Yeah, okay, rose a bit. Back to 8.3, back to basically rose by 8.6 points. Let me check jobless claims as well. Let me check jobless claims. Come on, come on, come on. Come on. Jobless claims 241,000. So that's basically another, it's coming from the aftermath of hurricane. So that's why we've seen another growth actually of the jobless claims and a revision higher. Let me share this with you guys. Here we are. Guys, the jobless claims, look at that, 341, and it was revised. The last week's reading was also revised higher. What that suggests? It suggests that we can see basically more um, sorry, I'm running out of steam a bit. It suggests that there is a growing unemployment rate that will support growth in the unemployment. But it's also the seasonality because of the hurricanes and in general the weather conditions. This is something that is usually the case this season, okay? This is usually the case during September, October, even November. So now, how that affects dollar, how it affects gold, and how it affects the NFP, the upcoming NFP. Basically, from the one hand, we have the retail sales that imply only to a more conservative rate cut from the Fed on November, so 25 points basically. On the flip side, though, the jobless claims today, the revision higher, um, continuing claims also rose. Ba, 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 ba. So we have seen basically again strong numbers, okay, even though the initial jobless claim slowed down a bit from last week. So last week it was 260. Today it came out 20,000 less, so a very very slight decline. So that's not enough for indicating a slowdown of the labor market. So that implies that we might see another strong reading from NFP on NFP day, which is not good for the Fed, okay? Which is not good for the Fed. So far, jobless claims, continuing claims, even the um, even the retail sales earlier imply that there is no room for Fed to have an aggressive easing. So that basically fixed the 25 points rate cut, or even the no rate cut, if you ask me. But everything will get clearer from the NFP. But another strong NFP could actually push the Fed to actually surprise us on November and keeps the rates unchanged. I think that if I check the Fed watch right now, I will see that the no change scenario has increased in odds, in probabilities. So let me check. So currently, come on, come on, come on. Come on. That explains also these mixed conditions over here, guys, from gold, okay? And I guess from dollar as well. I'm gonna flip to the dollar right now, right? So the Fed, okay, here we go. It's at 5%, 5%. Let me check the Fed watch. Yeah. So 11%, 11% only, 11% probabilities for a 25 points rate cut. And according to the Fed Watch, they still see a 50 points rate cut. But I think that will change as soon as the today's data are included. So yeah, that should change as soon as we see that, as soon as they count in today's data. Nonetheless, let's move on. So you have a confirmation over here, guys. Bullish gold back into track, extending higher, ready to bridge the first resistance of the day. I did mention that you need to be aware because that might be a short-lived pullback, and actually this is what happened. I had it already here just for you to watch, to keep an eye on it. And it is what it is. Look at that. I can actually also confirm that as well. So bullish after indecision, another bullish one, which is just open basically with no tail at the bottom for the time being. So the gold is back in demand. So with the next resistance level, obviously at the previous record highs. Now let's move on. Uganda, welcome. Zambia, welcome, welcome, welcome. Gold, 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 gold. Euro, gold. We covered what bits on this trade since yesterday closes more than enough to make it some cool cash. Well done. Well done, Timothy. Well done. Yeah, oil together. Yes, of course, oil together. Why not? So, just let me just by the way, that's euro dollar, guys. Okay, euro dollar. You see. So with her comments, this dip continues. Do you remember how we opened the session today? So with the dip here, we are boom, 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 boom. Her comments basically further confirm a more aggressive approach, right? December will be another opportunity to put the information in our model. She's definitely sounded dovish. That's explained also there. So basically, she's confirming that as long as the data confirm further ease, they will proceed with it. So they're not going to wait for the Fed to proceed. They took the situation on their hands basically, because usually ECB was used to follow the Fed. That's not the case this year. And remember that the raging market that we have seen since yesterday night, it was largely broken, right? Extended lower. Look at that. Even if I put the 30-minute chart, boom, boom. So there is a lot of momentum lower. Do you remember the lines that we put earlier? Both have been broken. For any one of you that had been here from the very beginning, we did mention these levels. They have been broken. It keeps extending lower, right? Come on. Remember what I told you earlier, that the very next support level, if the 10, if this decline continues, it will be the 107.75 level, right? 108, the round number, 108 is the next one, and the very next one is back to the previous support level back in July, which is also, it used to be a nice resistance level back in June. So 107.75 is a very important support level in the near future for euro dollar, with the momentum extending lower, right? I did mention, for everyone that was here with me at the very beginning of this live, I did mention keep an eye on this support level, because if it breaks, then that opens the door to 108.30, and further dip could see the asset retesting 108 and 107.75. I did say that. Now, let's move on to oil. Oil. Timothy, let's check the oil. Where's my oil? Oil. Come on. Let me check for oil. By the way, dollars keep rising. We're gonna come back to it in a bit. Let's check US oil. So guys, that's oil. Sorry, no, that's not oil. That's oil. Here we are. Gonna put the 30 minutes chart, okay? And still consolidating, a lot of indecision, weeks up, weeks down, week up, week down, week up, week down, week down. So a lot of indecision there, Timothy, intraday at least. But I'm gonna go back to the daily chart just to remind you guys that last actually on Monday, Tuesday, was it? Yeah, Tuesday, and Monday and Tuesday basically. um, we have seen actually a confirmed breakout of 72 bottom, which used to be a multi month support, basically a support the whole year, and that was broken. If I put let me just also wait a minute. Wait a minute. Look at that. the this is something that I am sure I've put on Telegram as well. I'm pretty sure for that. I put it on Telegram. I put it in my morning briefings as well. So 71. It was broken. This is a very important zone, right? The whole year, that it was largely broken this week. Okay, confirming that confirming that oil will keep we could retest could return, sorry, back to the 66 territory, even though it's steady a bit the last 2 days. So if I zoom in, you're gonna see that the last 2 days is steady, okay, around 70 dollars. So you need to keep an eye on this range, with the support coming at 69.50 level, and resistance. I'm gonna put it over here in the 71.30. Let's round it up a bit, okay? So this is a very important intraday ranging market, okay? You can see that momentum is flat. So there are a lot of consolidation basically will continue, Timothy, for oil. But you need to keep your eyes open, because the oil it's negatively affected by what's going on in the Middle East, and obviously by the consecutive disappointment that we're getting from China. Okay, so that might add pressure, further pressure on the oil. So keep yourself up to date with the oil. There might be the last 2 3 days we have seen it stabilized a bit. Okay, it was from one hand the fact that we have seen an unexpected drop in the US crude stocks, also the anticipation of retail sales, ECB, and so on. On the other side, it was the Middle East. Also, we had seen the China, which is a key. The Chinese demand is key for oil. So these contradictory factors squeeze oil. But, but, um, the concerns over oversupply of crude in the market, with the demand getting lower, is something that is bearish for oil. So fundamentals for the time being look to suggest that oil will get weaker. So use your technicals, use your immediate support and resistance levels to follow any breakouts lower, right? So 66, 69.50 could needs to be your trigger point for another attempt to the downside, and more precisely for a reversal back to September's bottom, which is the 66 level, right? Now, what else? Yeah, so a bit steady the last 2 3 days. Overall, okay, look at this weekly chart. Okay, something food for thought over the weekend, especially for tomorrow. If today and tomorrow we have a nice, decisive, strong bearish candle, that will mean that we have an evening star formation, which is a bearish formation, coinciding with, actually which complies with the bearish MACD, with the lower perform with the fact that RSI is moving lower, right? So everything point to a negative performance for oil. But you need a confirmation. You need to see the asset rejecting and breaking the 69.50 bottom, which is a double a fractal over here, right? And so the immediate support level as well. Intraday now. Okay, intraday, guys, I'm going to put the 30 minutes chart on. Momentum is a bit neutral. RSI is at 61. Okay, seems that there is further room to 70 at least dollars. Yeah, another move down to $70 per barrel. If I put the Fibonacci extension as well on this latest swing, yeah, that's in line with the 100 Fibonacci. Can you see $70 round number? Today's bottom so far, round number, and coinciding with the 100 Fibonacci extension as well. So the very, very next support level, if it fails, here we are, is the 69 50 69 65 level that we were talking about earlier. So they are in line, right? So what else? uh okay, sorry, David, I just saw your comment. Okay, let's jump into Nikkei. I think I repeatedly mentioned this graph, this chart, sorry, the dollar yen. I think I told you that it has been trading into 200-day moving average for how many weeks now? Let me put the 200-day moving average so you can see it as well. But I think it was, yeah. Let me get rid of this line so you can see it. Can you see that? That's the 200-day moving average in which the asset is struggling to break for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. We have seen it retesting it for 4 days in a row, but we don't have a confirmed closure above it yet. As you can see, it, the last 3 days, it closed exactly on it. Exactly on it. So as long as we don't have a confirmed breakout, there is no indication for a retest of 150, 170 level, right? That's the very next support day, the resistance level, sorry. So, my dear friends, reminder, this is the 50% Fibonacci level along with April, May, June, July support level, right? Double fractals, 50% Fibonacci level. So it's a very, very strong resistance level. But as long as we don't see the asset extending and confirming a closure above 149.40, right? Actually 149.50 to be more precise, closure, daily closure above it, okay? We don't have anything confirmed yet. Today it reached the 150. Okay, it's in a bullish bias, but for the medium term, at least for next week, you should see a confirmed closure above the uh, above uh, the 200-day moving average. For actually something that can help you, it will be the 4-hour chart. Okay, why? Because it will help you actually try um to find, let me just to try and participate in this rally earlier. I mean, at the time of at the beginning of the trend, let's say. So it has been in an ascending triangle, a bit narrow, a narrow one. Okay, so connect your lows, connect your highs, just to confirm another swing higher. 150 needs to break in order to imply to move back to 150, 170 territory. Okay, the fact that we have small body candles is not really helpful. But we have consecutive highs, consecutive highs, consecutive lows. Momentum is improving, but not rapidly, not significantly, as you can see. RSI is still close to 50. So, yeah. Small moves, but as long as it remains in track with higher highs and higher lows, um, remains positive. But dear friend, you need to be patient. Wait for that closure above the 200-day moving average, decisive one, and more precisely, ideally 150 level. Okay, 150. Yeah. Intraday now. 15 minutes, 30 minutes chart, 15 minutes chart, ups, up, faded, ready to correct with the next immediate support level at 149. 50, 149.48. So yeah, that's the very next support level. So higher, higher, low, higher, low. So it's ready in a 15 minutes chart. The dollar yen is ready uh, to correct a bit with the support coming at, yeah, 149.50, 149.50 level. So, so, what else? Dollars. Oh, you mentioned the peso. You did mention the peso, dear. You're right. Emerging markets have seen a significant uh, have a significant volatility. Not just the last 3 days, but in general this quarter. Um, Affected, by the way, emerging markets are affected by the upcoming elections as well. So, so as we're getting closer to the elections, the emerging market might, where is it? Okay, might benefit even more. Okay, so yeah, that's nice. That's nice. Just it looks like that's absolutely nice. 64 and rising. Four consecutive days in a row, bullish. Next resistance is basically back to September's highs, which is the 2015 level, 2013 level. But yeah, momentum is quite nice, it's quite strong. It looks like a flag. It looks like a flag, yeah. One, two, three. That's, yeah, that's nice. A very, very strong weekly performance, a very strong, decisive, bullish candle. Um, and actually, you are absolutely right, Timothy. Absolutely right. So, it just, I think it has already, no, ignore that. Should be. No triangle. I don't want the triangle. I want Fibonacci extension. Here we are. Yes. Yeah. Nice. So just a breath away from 161. 2057 is the very next resistance zone, if and only if it breaks the previous high, which has been seen back in August and September. No, back in September. Sorry, but momentum is like strong. It's bullish. Crude oil again. Yes, sure. Oil is the one. Okay. Let's start vice versa. Let's start with the short term. Um, Shatiso, 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 I think. Um, okay, I was saying to the guys earlier that there is a lot of consolidation. The last 2 days in a row is steady, but the fundamental perspective supports a bearish oil because of the oversupply of the crude into the markets, and on the flip side, uh, so lower demand right? Basically concerns over a lower demand, sluggish demand coming from China, because China keeps suggesting, keeps confirming sluggish economy. And the only positive factor will be the Middle East tension. But we have seen intraday the asset retesting twice the 70 80 highs and pull it back down. Three consecutive sessions lower, with the $70 back in play. Okay, it's just nearly there. But overall, it's still it's still consolidating as long as we don't. Can you see this? So these are two support levels that I put earlier. $70 and 69.65. These are two support levels, right? So if the $70 break, the very next support level is the 161.8 Fibonacci level at 69.65, but also coincides with the week's bottom. Okay, so far we are seeing and we're expecting to see oil moving within this range. As long as it doesn't break below the 69.50 level, we cannot confirm further dip for oil. So intraday consolidating, okay, consolidating, while in the medium term you can see that is steady. So you need to keep an eye on 69.65 level, 69.65, 69.50. A break of that level could open the doors down to 66 level, okay, $66 back here. If and only if we see a decisive break of that territory over here. On the flip side, a return back to $72, 72.50 could only be seen if and only if the asset exits the ranging market and breaks 71.30 level. Okay, but yeah, as I said, that looks a bit unlikely for now. But yeah, we can see that it's moving below all moving averages. Momentum is negative, RSI is negative, fundamental factors are negative for oil. So we pretty much, you need to keep an eye on a confirmation, basically a confirmed breakout of this support over here could open the doors lower to 66 level or even 65 level. Okay, but as long as we don't have a breakout of this key support level that has been halting and is halting for the whole October, the asset is expected to continue sideways. Now, if I zoom into the 15 minutes chart, just for your second only, and I'm gonna also, basically what I'm gonna do is use, where is it? I need Kanashi template for US oil, just to help you with some intraday analysis as well, short-term analysis as well. Where's the US oil, US oil, US oil, US oil? Here we are. So for 15 minutes, 15 minutes, let's see. Down, 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 but it will close in a minute. We can wait, it's worth waiting. There is a long tail at the top and a long, it just closed, guys. So I was ready to say that the fact that we have tails in both sides suggests indecision. So, okay, wait a bit, wait for another 15-minute session to see whether this will be bullishly cross, will be bullish candle, because a bullish candle here could retest back the 70 60 zone. Okay, yeah, so boom boom boom, yeah, Look like W formation. It didn't break. It extended. Yeah. So it worth waiting another few minutes just to cross check whether indeed it will get back to 70-60 or even 70-70 territory. That's in the very, very, very short time frame, 15 minutes chart, right? And this is a 5 minutes chart. Yeah. Okay. So, guys, if there are no further questions, I'm gonna call it a day. We covered gold. We have covered euro dollar, euro Oz, oil, dollar Mexican peso, dollar in the meantime, dollar yen, sorry, which is keep dipping lower and lower, right? Keep the Lagarde still adds pressure, even though wait a minute, we have more news from her. We are still looking at this soft landing. We certainly do not see a recession. We are concerned about growth. Inflation is definitely in on the disinflationary track. Um, so basically has mentioned that soft PMIs, which is next week, will make clear one more time that uh, the growth is under pressure. Basically, growth is disappointing even in Europe, right? So even though they don't confirm the 50 points rate cut, um, but for sure we are seeing that it's one way. They need to keep easing. There is no room for any pause because economy is in a stagnation. It is what it is. Um, uh, so they cannot pause. They cannot delay any more rate cuts, and that's quite clear. That's quite clear. So. Uh, As she said, all is heading into the same direction. Apparently, I have some reports coming here saying that some of actually majority of this selling in euro is also behind this euro fall is ECB, and this is absolutely true. This is for sure true because if we check euro, actually if we check dollar, you're gonna see that dollar also is well supported. So we have strong dollar due to the retail sales, uh, but uh, but um but mainly is the press conference that led to this euro dip. So even though they just cut a 25 points rate cut today only, um, uh, there is one way for the next month. Just more cuts, more dovish tone. Her tone was and her stance was way more dovish than was expected. So we have on the table more rate cuts for this year, and this is why it the euro is keep moving lower, regardless of the fact that that rate cut today it was already priced in. Um, yeah, so that's pretty much it, guys. If there are no further questions, I'm gonna call it a date. For any further anything that you might missed, anyway, you can drag and drop your cursor, and you're gonna see the other assets that we covered today. Um, so yeah, that's pretty much it. So summary: euro under pressure, dollar found some ground, right? I had dollar earlier. Oh, yeah, find some ground and it's back to 103.60 level, retesting the 200-day moving average. There is a key resistance over here, a key strong ceiling over here. So we might see a pullback after this rally. So strong dollar, weak euro, oil under pressure, steady, but overall under pressure. Gold in a rally, right? What else? What else? What else? That's pretty much it, basically. Yeah, gold in a rally. Yeah, that's it. That's it. So, have a great day ahead, guys. Take care. I can see that there are no further questions, so I'm gonna call it a date. Anything you need, we're here to help as usual. Send us a message in social media or via email. We are here to help. Thank you very much and see you again next week. Thank you.